Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss the recent events in Venezuela and what they mean for investors. As you've likely seen on the news, U.S. forces detained Venezuelan President Nicolas Maduro on charges related to drug trafficking and corruption. President Trump stated that the United States will, quote, run the country and work to expand Venezuela's oil production. While humanitarian implications are most important, you may naturally wonder what this means for the markets and the economy. Over the next few minutes, we'll explore three key areas. First, the historical context of geopolitical events and markets. Second, the potential impacts on oil prices. And third, Venezuela's minimal role in global financial markets. First, it may help to start with some history for context. The U.S. has long viewed both Central and South America as its backyard, so it has a history of active involvement in the countries of the region. Maduro's Venezuelan regime has been deemed problematic by various administrations, so the latest actions are an attempt to crack down on narco-terrorism. At the same time, oil is also a motivating factor. When we zoom out, we can see on the chart that geopolitical events often create short-term market volatility, but their long-term market impact tends to be limited. This is because these events don't typically change the direction of broad economic drivers. We've seen this pattern play out recent years with conflicts in Ukraine and the Middle East. Now let's turn to oil prices, which may be the most consequential issue for investors because the primary channel through which geopolitical events affect financial markets is through commodity prices. Venezuela is important here because the country possesses the world's largest proven oil reserves at approximately 304 billion barrels. That's even more than Saudi Arabia's 267 billion barrels. However, despite these vast reserves, Venezuela produces far less oil than other countries. Over time, increased Venezuelan production could benefit U.S. oil companies and place downward pressure on oil prices. This makes the situation different from conflicts that disrupt existing supply, like Russia's invasion of Ukraine in 2022, which drove oil prices to nearly $128 per barrel. That said, energy prices are difficult to predict with accuracy. When Russia invaded Ukraine, many predicted that oil prices would remain elevated indefinitely. However, prices stabilized and began declining far sooner than many projected. Finally, a key fact for investors is that Venezuela plays an insignificant role in global markets. Its stock market is small and illiquid, and it's not included in the MSCI Emerging Markets Index. In the bond market, Venezuela has actually been in default since 2017 when it missed important payments. So, most investors have minimal or no direct exposure to Venezuela. The situation in Venezuela will continue to evolve, and there may be additional developments in oil markets that capture market attention. The bottom line is that the arrest of Venezuela's president represents a significant geopolitical development. However, history shows that portfolios built around long-term financial goals can navigate geopolitical uncertainty. We hope you found these insights helpful. If you would like to discuss any of these topics in more detail, or if you have questions about your portfolio, please don't hesitate to reach out, and we look forward to speaking with you soon.